Hey everybody, welcome to Trading Capital's position update analysis here on May 19th. Wrapping up and analyzing the positions that we have on the table right now in the markets ahead of Options X. I think we're positioned well to benefit in pretty much any which way the market is designed to go. Now, I think we're positioned more on the short-term long side for a bounce, but we still have shorts on the table that will help us if that downturn does occur. Jumping right into PayPal here, it was great to see that many of our trades, in fact, most of the trades that we have on the table were positive for us today despite a falling market. So when all of our trades are showing great relative strength in comparison to the broad market, that is excellently bullish in our favor, and it shows that we're accumulating the right names at the right technical levels, and we're dollar cost averaging in with small positions, accumulating so that we have a great average for when these pop. So PayPal was one of those stocks green on the day. It finished up 5.3% despite a weak QQQ, large cap tech stock market. And PayPal's very interesting to me because when I analyze this, if we flip down, look at PayPal where it was trading. It had this double top scenario, an actual pierce of the double top, and it's just completely collapsed sub $100 since July of last year. So in less than a year, this stock has been decimated from over 300 down to around 81.73. And notice how we're trading in this parallel range. I love these downward names when they've been beaten down into technical support, which you can see these pivot lows here, and now it's trading in and amongst this chop over here. Our average is right on this dotted green line, which is around the 83 level. So I think we're greatly positioned. We're positioned right at the COVID low for this stock to have a massive bounce. If you look, this stock has done a complete round trip of the QE bubble, and this is the definition of a bubble deflating, is this stock right here. You can't really get any better of a picture than this one. But analyzing PayPal here, this downward sloping trend line, a lot of people would argue that it's actually forming a bear flag pattern, but this is not a bear flag pattern. A bear flag pattern drops like this, and it doesn't have this downward sloping channel. It has an upward sloping consolidation like that, and then it favors a breakdown. So just removing those and understanding that this is not a bear flag. This is just a stock that's beaten down. Yes, it's in a downtrend, but at some point these catch a bid. And when we look at the level that we have this stock and own this stock, we're at a beautiful level to profit. Notice how you did pierce this parallel channel, but you were saved on this day here, and then you've basically been putting in this bullish consolidation, which looks to be breaking out. Today you actually closed right on this wick high, you pierced it, so it stands to suggest that this stock is going to be breaking out very soon. And the likelihood as to where I think PayPal goes is to the top of this channel, which just so may coincide with this gap fill over here at the 107 mark. Can you go even higher than that? Absolutely you can. Ultimately, where I think PayPal goes, you have kind of this double gap fill on the chart, and I think by the price action coming all the way at least to these pivot lows, that would be a great level for PayPal to have massive resistance. The actual gap fill is all the way at this 171 mark, but that may be a stretch until the markets get some overall bullish Fed behind them. So PayPal bull flag off of this low. If we flip to the weekly basis, you're still holding this weekly reversal bottoming tail, and it does have a substantial amount of volume behind it, which is a good thing to see. But overall, PayPal is significantly, I think, one of those stocks primed to actually break up. And this is what this type of pattern suggests. Whenever there's a down-sloping parallel channel, it's more likely to break up, versus if this channel was up-sloping, for instance like that, then it's more likely to break down. So good to see relative strength. Spotify was great for us today as well. Also up on the day, 1.3% despite a falling market. So again, notice this bull flag pattern, and you have these tails forming, which shows that there are sellers distributing, but the buyers are also propping this price up in a massive tight range. And the nice thing that I'm seeing on a technical basis is that you're starting to bubble up against this 25-day moving average, which is your short-term resistance. I think it's good to see and very healthy for the pattern that you're consolidating in this bull flag upper range right underneath this moving average, and it stands to suggest you're going to break out very soon. But if you look at Spotify, look at this stock. It's also been beaten down 386 down to sub 100 that we have this in. We're deeply in the money on Spotify already, so I think we're over 10% plus. There is this gap fill right on this red line around 97.20 that should get filled at some point, but there is a chance that Spotify can continue breaking up before it comes back down to fill that gap. Canopy Growth, another beautiful one that we're in the money on it nicely, deep in the money, so protect that trade. You do have this bullish consolidation happening off this low, so that's awesome to see. The only thing that's tricky is earnings is coming up, but I am favoring still a bounce in the stock, because when you zoom out and you look at where we were trading February of last year, just an astronomical decline, basically from 56 down to sub $5 at one point. So that's, in order for Canopy Growth to go back to these highs, it would have to 10x. Just think about that type of move and the risk to reward buying at these levels. So we're deep in the money. Earnings is approaching, so I'm hoping to potentially get a pop before earnings. I'm hoping this bull flag pattern breaks to the upside and potentially takes us into this pivot top here. And then potentially also you notice that you had a massive reversal candle here, which will act as resistance. If we can get into this first level, I will be looking to sell my Canopy Growth, especially ahead of earnings. I do think the stock has more upside over time, especially as midterm start, promises from politicians start. Obviously, marijuana is a big hot topic to potentially sway votes in your favor. So there could be some chatter in the market about potential legalization, which would boost the stock. But with earnings on the horizon, even though they've reported great earnings over the last few earnings reports, they have done a buyout which could potentially dilute their stock. I haven't looked into all of the terms yet of the buyout that they did, Canopy Growth, but we'll just have to monitor it, and I am looking to exit this trade for a gain ahead of earnings. So just keep that in mind, keep it on your radar. But great to see, great relative strength, up 5% on the day. Another one that I think is going to reward us excellent is STNE. STNE is one of my favorites right now because you do have this massive bull flag forming, which is starting to break. It's actually breaking a little prematurely, but I think it's allowing this pattern. I think it can hold a premature breakout because of the fact that it's been so beaten down. When you look at it, was at 94 and it's flushed all the way down to 670 and now trading at 935. We're deep in the money on this trade as well, and you do have this descending wedge pattern that is likely to break out to the upside in due course. So where I'm looking to potentially take profits is, notice how you've closed above this 25-day moving average. Tomorrow will be a confirmation day for STNE. If you look, the next resistance will be this 50-day moving average. Once you clear this 25, you go attack this 50. I'll potentially be looking to take profits around this $10 mark, maybe a little bit higher, just depending on how the S&P fundamentals are. But be ready to take profits. We could be in the range of 19%. If you're looking to be a little more greedy, this stock is completely beaten down. It could trade to the top of this wedge pattern, which would put you at around the $11, just under $11 mark, which would actually be a net gain from our level of just over 31% on the trade. So if you're looking to be a little more greedy, it certainly has potentials, but I'm not trying to be cute with this market. When I see 10 to 15 to 20% gains on the table, I'm looking to take them off because this market is not out of the woodworks. I do think overall it goes lower. Yes, there's some certain pivot lows that we trade against, but they could see a double bottom scenario over the coming months, which will allow us to re-enter these trades at a cheaper price once the overall indices see some more downside pressure. Another trade, ACHR, we're shorting ACHR. We have our average at 405. Reason we shorted there is you head right into resistance here. Let me just flip to see this wedge formation here that you've been trading in. This stock is completely speculative. Flying vehicles, flying cars I mean, yes, eventually it's probably going to be one of the best investments to make, but ultimately you have to go through this cleansing period where speculative investments like ACHR are going to get decimated, rather than if the Fed is still tightening, stocks like ACHR, flying vehicles are going to get decimated. I mean, we're still working on electric vehicles and all this ESG movement, let alone flying vehicles. So ACHR, I think, is definitely, we've profited on this one before, not too long ago. I think we shorted it up here, sold it for a nice gap fill down here, over 10%, and we're looking to do the same. We're just trading this stock in and out. Where I'm looking to cover this short is at this gap fill around the 350, 349 area. It is a daily gap fill. That would basically put us in the money over 13%, which is awesome to see. Teladoc, another positive trade up on the day, up over 6.6%. The thing I like about Teladoc is on a intraday basis, you have this mini bull flag pattern that you're trading just bubbling up against this moving average, which favors a breakout. But if you look at the daily chart, again, we are up on this trade so far over 10%, so that's beautiful to see. Teladoc really impresses me is because you did fill this gap and you're forming this tight bull flag of consolidation, which in my opinion just looks primed to break out right into the top of this resistance around the 38-39 level. Ultimately, I do think you potentially head to this pivot low here around the 42.38 mark, but I don't know if that's going to get there. This cycle will most likely be out of the trade before then. So we'll just have to keep monitoring all of our trades and see how things progress as we move forward. So we'll just have to keep monitoring our trades and see how things progress as we move forward. But we're deep in the money on several positions. If we get that final pop, be ready for more alerts. I will be looking to pull and slowly start skimming some of those profits off the table, just like we closed I think 8 winners this week and slowly pulling profits off the table. I'm going to continue to look to do that as the markets do get that bounce that I think is going to occur. And the reason I think the markets get the bounce is because underlying the breadth of the market is the small and medium cap stocks, and you're starting to see those bounce, and they have bullish formations all over the place. So once the big cap tech bottoms out along with the bigger cap consumer staples, which I think are close once the margin selling is complete, then you'll start to see the markets get that inevitable bounce that I think is likely to occur. Looking at Valero, we are shorting Valero as well. I want to discuss Valero because we're out of the money right now. Valero is extremely extended in my opinion. I mean, if you simply look at this move, it's gone parabolic, vertical on the soaring energy prices, but it's only a matter of time in my opinion before Valero comes down. If you notice on Valero, we do have this weekly doji forming, which showing that there's clear distribution happening at these highs, and it is on a little bit more heavier volume than usual. It hasn't taken out this buying pressure yet, but I do think it's only a matter of time before that occurs. You are into these major resistance that we discussed. But that being said, if you look at the price action of Valero had this massive sell-off, and then buyers stepped back in, reversed the price back up, had this reversal closing inside of this red bar, which would have been a good sign for the bulls and not a good sign for us that's shorting it, but it actually reversed late on in the day and closed below, and it still made a lower closing price than the previous daily close, which is bearish to see. Even though the stock looks like it had a positive green day, it actually finished negative on the day, which is exactly what we want to see, because it shows that early buyers were buying this up, buying this up, buying this up. And if we go to the intraday action, you can see that you had this massive flush. This was your opening. You had this gap down, buyers stepped back in, bought the price back up, and the sellers just came in at the last couple hours of the day and closed you below the opening, or closed you below the close of yesterday, which is awesome to see, because not only did you fill this gap that was left on the chart, but you rallied and you made it a little intraday topping tail right into resistance. And I think there's now tremendous downside for Valero coming in the near future. Now you could pop up a little bit and form more of a little bit of a right shoulder before heading lower, but I think Valero has seen the highs here, and it's only a matter of time before this stock crumbles significantly. Where do I think it comes down to? Basically, you'll have your first level at 105 support, and then I do think it flushes down to this 87 support at some time. There is a key technical gap that you should fill, but it'll just have to be a longer swing trade that you're prepared to hold this trade for, because it still is a strong name, but I do think it eventually comes down there. Just like a lot of people didn't think Walmart and Costco and all these leading sectors like consumer staples, that they were leading all of 2022 up until about 1 week ago, or really 4 days ago, since the start of Monday. So it's really interesting how stocks do turn on a dime and the repricing occurs so quickly, and that's the decompression of asset values that we're experiencing. It's truly one to behold. BMY, we're shorting. I like the price action on BMY. We've been in this trade a little bit longer. A lot of people would think this is a bull flag. I don't think it's a bull flag, because you had too deep of a sell-off, which negated these three initial surges to a high. So I don't think you're forming a bull flag, in my opinion. Nonetheless, you did have this kind of this fake out breakout where you made a new high, took out all these highs, and then you had a complete reversal yesterday. And then today you opened, you had a massive gap down. And it's interesting because if you flip to a longer time frame, the weekly, if tomorrow closes at these lows or lower, you then have a weekly topping tail in effect on BMY. And I think that would be the line in the sand for BMY. You have these long-term resistance trend lines. You are completely extended. You'll have a potential weekly topping tail in effect, which will hold a lot of power, and stands to suggest BMI will have a lot more downside. Officially, the first resistance or support would be around the 68, and then you have a little bit of a support around 63. But in reality, you could trade, due to the fact of this wild swing, you could trade eventually all the way down to this 40 level at the low range of this sideways chop, this multi-year chop formation. I think that covers about it in terms of our trades. Like I said, we are deep in the money on many of our trades, which is awesome to see. Be ready for natural gas to keep pulling back, and be ready for us to take more profits off the table. We don't want to try to, get too greedy in this market environment. We'll always look to reassess and look for new trade setups. Understanding risk to reward is probably the one thing that has saved me as a trader in terms of either being too greedy or not greedy enough. And honestly, having a good risk to reward setup before you enter a trade is always key. Knowing the downside move, what you're willing to lose, I think has saved me more times than not. And then knowing the upside, what you're willing to gain, and getting out at that levels has also saved me from some horrible collapses of holding on to a stock for just that extra day or extra week too long. So understanding R&R is extremely important from a technical and fundamental investor or trader's view. Thank you all for being members here at Trading Capital. We'll continue to print the profits here in 2022. It's certainly been a profitable year, while we have hedge funds like Melvin Capital blowing up, Archegos, and probably many more to come. The losses in pension funds have been severe, but here we are at Trading Capital, trading through the mess, trading through the chop, trading through a lot of the manipulation, and ultimately making this bear market recession work in our favor. And the fact that we're accumulating cash while making profits in a falling market only positions us more so to benefit from when this market does bottom, which I think is potentially late this year, maybe early 2023. I think it's going to bottom a lot faster than what people think, because the Fed will eventually revert course. And as soon as the markets sense that easement of economic policy, that will be the turning point in the market, and assets like rates will sense it, gold will sense it, risk off equities will sense it. So there's a lot of correlations that we will monitor.